Welcome to the Watson Brothers summary of 2015 and our predictions and discussion of some concerns moving forward in 2016. I will start real quick with a summary of 2015, and by all accounts, it was a really good year. The number of units listed overall in the Kelowna Real Estate Market was up about 3%. However, the number of units sold was up about 8%, meaning that that's going to be always give pressure on pricing. If there's not enough product coming on the market and it's selling quicker, prices are moving up, and they did move up. In fact, as I mentioned, units sold was 8%, dollar volume up 10%. So we're getting a bit of a gap. And we've been talking about that gap now for the last 12, 24 months, Barrett, and we are not going to see that change, we believe. How does the residential single-family market fit within the overall market of Kelowna? There was actually about 1% more homes listed on the market last year than the year before. However, sales and inventory were down 18%. So 1% more on the market, 18% less to look at. Barrett and I are out looking at properties. We have about 20% less homes to show buyers than we did at the end of last year, which is a really incredible number. How does that impact pricing? The average single-family home was up, and this is a number you need to keep in the top of your mind, was up 2.5%. Now you say 2.5%, that sounds kind of low. I heard in Toronto we're up 20%, in Vancouver's 30%. 2.5% is nice, steady, even growth. It provides us with a balanced market to work within. However, as we mentioned, we're starting to see inventory get tight, and that could be a problem down the road. One other thing I just want to talk to you about is dollar volume overall. If you remember our predictions last year, we were sitting in April saying, when are we going to get to $1 billion in sales? Well, that happened in June, which was a time before it ever happened, than it had ever happened before. Where did we end up at the end of the year? $2.5 billion in sales in Kelowna, which is a number that has never been achieved before. That was actually 10% higher than last year.
Which was the other best year.
Which was the best year before that.
Local concerns, there's actually three that Ian and I run into when we're dealing with buyers and sellers. The first one is how the Alberta oil prices are going to affect our local real estate volumes or pricing here. The tighter government lending regulations that just came into effect about 6-8 weeks ago now, so we've had a chance to test the waters there, and as well the low Canadian dollar. So oil prices, if we are seeing usually around 11-12% of our buyers come from Alberta, we're up over 14% right now. So what we're seeing there is them saying, you know what, had a great run, not making the dollars anymore. If I'm going to retire or if I'm going to come maybe look for another job, they're coming to where, when it's minus 29 today in Calgary and it's sunny Kelowna, this is the direction that they're coming to. The tighter government lending regulations, those affect houses that are over $500,000. Locally, we are sitting at $511,000. So you could argue that on average, that regulation impacts each and every house sale. Has it affected us? Those stats Ian just took you through say absolutely not. The last one is that Canadian dollar. We're running, let's say, 65 cents here. When the dollar was up at par, in cases it was even a little higher if you remember than the American dollar, tons of our local money was heading south. It was going to places like Phoenix, buying golf course properties. Not happening anymore. That money is staying local. It is buying investment properties, it's buying commercial property, it's buying ski hill vacation properties. When you've got that 65-cent dollar, you're not firing those into a suitcase and taking them across the border. Not a good return. So those three things impacting us at all, only either in a very positive way so far, you could say positively neutral, but we're easily able to defend those three. Sometimes questions are negatives. Moving forward, what do you think overall, Ian?
Well, I think if we look at our average sale price now of $511,000, and we see individual family, single family growth at 2.5%, which is very stable, we see things continuing on in that form for the next year as long as interest rates remain low, and there's no reason to think that they're not. The economy is doing well, and even with the low Canadian dollar and the Alberta oil price, as we discussed earlier, it doesn't seem to have an impact on the fact that people want to keep moving here, and people within Kelowna are moving up and they're moving out.
What we'd love to see in 2016 is for you to give us a call. What you see in front of us and what we're looking at are, in all intents, averages. Ian and I deal in specifics. Where you live, in a home, on a street, in a neighborhood, in an area of town, can all affect things. That 2.5 for you might be 6%. That 2.5 for you might be minus 1%. Where do you fit into the marketplace? And looking forward, what do you want to do in 2016? That is, after almost 40 years, what we are very good at. We'd love to get you down to the office, have a coffee, as we always say, hear what your needs are, and let our experience help you. In 2016, have a great year, and we will see you next time.